Based on the latest verified news, the Iraqi dinar remains stable with a fixed exchange rate around 1,300 IQD to 1 USD, and there are no credible reports of a sudden dramatic revaluation. The country's economy is at a critical crossroads, showing clear progress in some areas while facing deep-rooted challenges in others. The core information on the current state of the dinar and Iraq's economy is outlined below. The dinar's current status: official exchange rate approximately 1,300 IQD to 1 USD. Market rate, Baghdad, about 144,000 IQD per $100, or 1,440 IQD to 1 USD. Monetary policy: the Central Bank of Iraq, CBI, maintains a managed stability approach, using substantial foreign reserves to defend the currency's value. Reality check: claims of an imminent massive revaluation are unfounded and considered speculative. The IMF and other official bodies do not support these claims.
Key economic challenges. Iraq's path forward is complicated by several structural issues: extreme oil dependence. Oil revenues still account for over 90% of government income, making public finances extremely vulnerable to global price swings. The IMF notes that in 2024, the oil price needed to balance the budget rose to around $84 per barrel. Unsustainable public spending. A massive public wage bill consumes a huge portion of the budget. Over 40% of Iraq's workforce is employed by the public sector or state-owned enterprises. Delayed reforms. While the need for fiscal reform, economic diversification, and fighting corruption is widely acknowledged, political pressures have consistently slowed their implementation. Persistent corruption. Governance weaknesses and corruption remain significant hurdles to growth and deter foreign investment.
Signs of progress and growth. Despite the challenges, 2025 has seen several positive developments. Sectoral advances. Oil and gas has halted imports of refined petroleum products like gasoline and diesel, achieving a long-sought goal of self-sufficiency and paving the way to become an exporter. Major new contracts with international firms aim to capture flared gas and boost production. Agriculture. The country has achieved a wheat production surplus for the third year in a row and is expanding exports of products like dates. Infrastructure development. The government is advancing mega projects like the Development Road, a trade corridor to Turkey, and the Al Fau Grand Port, positioning Iraq as a future regional trade hub. Human development. For the first time, Iraq has entered the UN's High Human Development category, with life expectancy rising and poverty rates falling from 20.5% in 2018 to 17.5% in 2024. Foreign investment. Significant investments are flowing in, particularly from Gulf nations. Saudi Arabia has allocated $3 billion, and Qatar has signed deals worth $7 billion for projects in real estate and healthcare. If you're looking for the story on the Iraqi dinar and the country's economy, the picture that emerges is one of a nation standing at a crossroads. There are two powerful forces at play. One is the strong pull of the status quo, a deeply ingrained dependence on oil, recurring budget pressures, and significant political hurdles. The other is a clear and determined push towards transformation, modernization, and building a new economic foundation for the future. The news from the final days of 2025 provides a perfect snapshot of this ongoing struggle and the difficult path Iraq is navigating. The day-to-day of volatile dinar. Let's start with the immediate headlines. The value of the Iraqi dinar is experiencing daily volatility. The official exchange rate, set by the Central Bank of Iraq, CBI, remains pegged at 1,300 IQD to 1 USD. However, the price on the parallel market, the rate you would get at a local exchange shop, tells a different story of fluctuation. For example, over just 2 days in late December, we saw this movement in Baghdad. Monday morning, the rate was 144,400 IQD per $100, or 1,444 IQD per $1. Tuesday morning, it jumped to 142,550 IQD per $100.
Tuesday afternoon, it then fell back to 143,900 IQD per $100. This back-and-forth movement underscores a market that is sensitive and reacts to various pressures. Financial data aggregators also show this trend over a longer period, with the dinar weakening by about 0.31% over the past 12 months. The CBI has made efforts to stabilize this, including transitioning to a new trade finance system managed by commercial banks, which has been acknowledged by the International Monetary Fund, IMF, as helping to reduce the spread between the official and parallel rates. The overarching challenge: oil dominance and fiscal pressure. Beneath these daily currency fluctuations lies the core structural issue. Iraq's economy is overwhelmingly dependent on oil. According to the IMF, oil revenue accounted for a staggering 36% of Iraq's total GDP in 2024. This creates a critical vulnerability.
The IMF points out a major warning sign. Because public spending has grown significantly while non-oil revenues have stagnated, the price of oil needed for Iraq to balance its national budget has skyrocketed. It has increased from $54 per barrel in 2020 to around $84 in 2024. With global oil prices volatile and often below that threshold, this has created severe financing constraints. The government has even had to delay salary payments to some state-backed forces and suspend new public sector appointments and promotions until the 2026 budget is approved. The push for reform and modernization. Despite these deep-rooted challenges, 2025 was not without progress. There is a clear, multi-front effort to modernize the economy and lay the groundwork for a more diversified future. Banking and financial sector reform. This is a top priority. The Central Bank of Iraq is actively pushing a digital transformation agenda. It has launched initiatives to enable digital banking via smartphones and introduced the Digital Payment Regulation of 2024 to align the country with global financial standards. The goal is to reduce cash use and improve financial inclusion. Furthermore, Iraq's recent accession to the European Bank for Reconstruction and Development, EBRD, signals its commitment to integrating with international financial systems. Major infrastructure and energy projects. Iraq is betting big on large-scale projects to transform its role in the region. Two key initiatives are the Development Road, a massive trade corridor project aiming to connect southern Iraq to Turkey, positioning the country as a new hub for regional trade, and the Al Fau Grand Port, a new major port in Basra being developed with expertise from the UAE. In the energy sector, beyond just extracting oil, Iraq has halted imports of gasoline and diesel, achieving a long-sought goal of self-sufficiency in refined products and paving the way to become an exporter. It is also signing major contracts with international firms like Total Energies and BP to capture flared gas and develop integrated oil and gas fields, which is crucial for improving domestic power generation. Agriculture showing promise. This sector has been a relative bright spot. For the third consecutive year, Iraq has achieved a wheat production surplus, with marketed quantities exceeding 5 million tons. The country is also actively expanding its date exports to Asian and European markets. The existential threat, the water crisis. Perhaps the most sobering development is a crisis that transcends economics and strikes at the heart of Iraq's identity as the land between two rivers. The country is grappling with its worst drought in a century. A combination of climate change, upstream dams built by neighboring Turkey and Iran, and years of domestic mismanagement has drastically reduced the flow of the Tigris and Euphrates rivers. The scale of this crisis has forced Iraq into a controversial agreement. In November 2025, it formalized a multi-billion-dollar oil-for-water deal with Turkey. Under this agreement, Iraq will sell a set amount of oil each day, and the revenue will be placed into a dedicated fund to pay Turkish companies to build new water infrastructure in Iraq, such as dams and irrigation systems. While Iraqi officials hail it as a necessary step for water and food security, critics warn it risks turning a fundamental human right into a commodity and could make Iraq strategically dependent on Turkey. The road ahead, a call for urgent action. Looking forward, the path is clearly defined by international observers like the IMF, but it is politically difficult. The IMF's executive board concluded in July 2025 that a sizable fiscal adjustment is needed to stabilize the economy. Their key recommendations include controlling the public wage bill, which consumes a huge portion of the budget, by limiting mandatory hiring, boosting non-oil revenues through reforms like increasing customs duties, excise taxes, and eventually introducing a general sales tax, accelerating the restructuring of state-owned banks and continuing to strengthen the private banking sector. The ultimate goal is to create fiscal space for productive investment in infrastructure and to implement a comprehensive structural reform agenda that the IMF estimates could double non-oil economic growth in the medium term. Outlook and essential reforms. International institutions like the IMF stress that Iraq's future stability hinges on urgent reforms. Key priorities include fiscal consolidation, mobilizing non-oil revenues through tax reforms, and curbing the public wage bill; financial sector modernization, completing the restructuring of state-owned banks and expanding digital financial services; private sector growth, reforming business regulations and the labor market to create jobs and diversify the economy away from oil. In summary, the story of Iraq's economy today is not about a single event or a sudden currency revaluation. It's a complex, real-time story of a country trying to modernize its financial systems, build transformative projects, and address a devastating environmental crisis, all while wrestling with the immense political and social challenge of moving beyond an oil-centric economic model that has defined it for decades. The daily dance of the dinar's value is just the most visible symptom of this much larger and consequential struggle. I hope this detailed overview provides the authentic information you are looking for. If you would like a deeper dive into any specific area, such as the details of the banking reforms, the politics behind the oil for water deal, or the IMF's full set of projections, I can provide more focused information on those topics.